We now know that wages have finally reached the point where they're almost where they were in the late 70s before we were, Reaganism and giant tax cuts were inflicted upon us. The top tax rate at that point in time was 74%. Just a decade earlier in the 60s, it had been 91%, going all the way back to the 1930s where FDR said it. And what does this have to do with inequality? How does this influence an economy? The CNBC just released a new poll that shows that the majority of millionaires and multimillionaires support Elizabeth Warren's suggested wealth tax, or 2% levy on wealth of more than 50 million, 3% on wealth over 1 billion. I've been saying forever we need to roll back not just the Trump tax cuts and the Bush tax cuts, but the Reagan tax cuts. But this from CNBC, fully 60% of millionaires support Warren's plan for taxing the wealth of those who have more than $50 million in assets. 88% of Democrats, 62% of independents, 36% of Republicans, but the majority of billionaires. So what does this mean? How does this work? What do taxes have to do with the average economy, and how do they affect your wages? Dr. Richard Wolff is with us, the economist and co-founder of Democracy at Work, the author most recently of Capitalism's Crisis Deepens, Essays on the Global Economic Meltdown. Democracyatwork.info is the website, and rdwolf with 2 Fs.com, his other website. You can tweet him at Prof. Wolf, as in Professor Wolf. Professor Wolf, welcome back.
Thank you, Tom. Glad to be here.
So you heard my setup. You want to go off on it?
Sure. 2 things that immediately come to mind. The staggering reality, at least it staggers me, that here in the United States, when we had the high tax rates coming out of the Great Depression in the 90s because of what Roosevelt did, and even into the 80s, 70s, 60s, for many decades after that, those early decades after World War II with the high tax rates had generally lower unemployment than we've had since and faster economic growth. So the whole idea that you needed to cut the taxes on corporations and the rich to get the economy to work better, the proof of the pudding has been exactly the opposite. As the taxes went down on corporations and the rich, economic growth slowed, unemployment became a more serious problem, and the inequality that these tax cuts produced took such extreme forms that it's now an issue so broadly understood in the American public that socialism has returned as a topic that everybody has to talk about and contend with. The ironies of all of this, the craziness of all of this, speaks to the ability of at least a segment of the American community being able to be lined up behind tax cuts no matter how stark the evidence that they have been an engine of inequality and economic decay.
I've told 2 stories on this program relative to this. One is back in the 70s, my business partner, Terry O'Connor, and I had a very successful business for a couple of years. It was making a lot of money. And I remember when our CPA sat us down and said, you guys are going to hit a 50% tax bracket. Now, at this point in time, the top was 91%. But he says, you guys are going to hit the 50% tax bracket. You really shouldn't be taking this much money out of the company. You should be expanding your company. And so we decided to do that. We hired 3 new people. We rolled out a new line of products. It was an herbal tea company. We rolled out a line of potpourris. And I think, CEOs all over the country were doing the same thing. Average CEO pay was only 30 times the worker pay at that time. That's number one. And then number 2, and I'd love to hear you comment on both of these. Number 2 is, it seems to me as an employer, I've been an employer for the last 50 years, that generally speaking, employers hire people based on take-home pay, knowing that, and I mean this broadly. This is not how generally I think about it, but if an employer knows that somebody will do a particular job for, let's say, $30,000 after taxes at the end of the year, then they hire them for whatever. Say it ends up being $38,000 because there's going to be $8,000 in taxes. But if you reduce the taxes on working people, then the employer goes, hey, now they've got more take-home pay, but I know they'll work for less. So over time, they will actually lower their wages. Whereas if you raise the taxes on working people, employers know that, hey, people can't live anymore. We're going to have to raise their wages. Now, that relationship which is the reverse of what the Republicans are peddling, is also the reverse of how it works with very rich people. Very rich people, you know, the amount of money that they take out of the company doesn't matter, right? It's not because nobody is controlling their wages. They're the ones who can define their wages. What do you think about those things?
I think those are all actually very correct, very, supported by economic science as much as we dare to call ourselves a science. I think the bottom line, though, is that this is mostly a political gambit, that the individualism in the American scene particularly seems to tell a sizable number of our people that anything you do to enhance your own individual situation is okay. I mean, assuming you don't break the law, is okay. You don't have to worry about, you don't have to think about the secondary consequences, that there's some magic in the world, let's call it the invisible hand, that will make it all okay for you to look out for number one no matter what. And so when it comes to taxes, we produce craziness. The corporations always want a tax cut. They'll make up whatever argument you want. I mean, we're about to see Mr. Trump give Mr. Laffer, aptly named, an award. The man wrote an economics argument that said if you cut taxes, it'll be so wonderful for the economy that we'll hire so many more people and we'll do so much more business that we'll get the taxes back. And so a tax cut on corporations and the rich really doesn't impact the revenues of the government, so nobody need to be worried about it. We don't have to worry that we'll have to pick up the tax, and we don't have to worry about cut services because the tax cuts pay for themselves. For 30 years, this nonsense has been peddled. It has never worked. That doesn't matter. It continues to be peddled, and it's about to get an award. That's because we let corporations and the rich believe that getting something better for them won't have secondary consequences of the sort you just listed. But they always have, and then we are all surprised, A, that it happened, and then in shock, we watch the corporations and the rich keep peddling the same arguments, keep getting the same tax cuts. I mean, even as I admire the millionaires who said that Elizabeth Warren is right, you really have to sort of take a step back and recognize that they are the beneficiaries of all of these tax cuts. There is not a coincidence that the tax cuts, step by step, are in line with the growing inequality of the United States. Those two things are very closely interrelated. They've taken the money that they don't pay in taxes, the corporates, the CEOs and so on, and given themselves the enormous pay packages, which is why that statistic you gave, 30-to-1 was the CEO to the average worker ratio back in the 60s and 70s, and it's closer to 3-to-1, 300-to-1 now. That's where the tax cuts went. They didn't go to economic growth. They didn't go to stimulate investment. They went to create a class of folks at the top who are out of control in their wealth hunting. And this inequality is fostered by this logic that you can do these things and it won't have secondary consequences. They'll just be the benefits of tax cuts without all the costs that they inevitably bring with them.
Yeah. Now, back during the Eisenhower administration, correct me if your information conflicts with mine, but because I'm doing this from memory, but I wrote about this back in 2014 in a book called Rebooting the American Dream. My recollection is that during the Eisenhower administration, 1/3 of total federal revenues, money coming into the government, was in the form of corporate taxes. And today it's about 6%.
That's right.
And of course, back during the Eisenhower administration, Republican President Dwight Eisenhower was just very, very happy with a 91% top tax rate. And now the top tax rate, is somewhere between 21% and 30%, depending on what kind of corporate structure and how you're taking your money out and all that kind of stuff. In your opinion, what are appropriate tax rates? The thing that I've noticed is it seems that in countries where the top tax rate, and we're talking about taxes on millionaires and billionaires, not working people, the top tax rate is over 50%. It tends to stabilize the economy and stabilize the labor market. Where it's under 50%, it tends to be unstable. Now, that's, it's just my observation. What do you think? Where should it be, both the individual tax rates and the corporate tax rates?
Well, before I answer, let me summarize what you just said because it's really important for people to get it. Over the last 40 to 50 years, the tax structure at the federal level has been summarized by these two movements. The burden of taxation on corporations and business has been drastically reduced in favor of taxes on individuals. And among individuals, the burden of taxation has been reduced mostly for those at the top and shifted to those in the middle at the bottom. And you put those two things together, you have the economic history of the United States in the last 40 years and the explanation for the absurd inequality that is now so gross as to overshadow almost everything else about the economy as a consequence of all of that. So my first reaction, like many others, is why in the world haven't we long ago recognized the absurd consequences and reversed the process? Let's go back to the tax levels of the 60s and the 50s, because the irony is that we're not talking about confiscatory taxes. We're not talking about Russia or China or communism or anything like that. We're talking about American history, what our previous leaders, Republican and Democrat, thought was a reasonable amount of taxes. The basic idea always being you tax most those most able to pay. A simple principle, directly applicable. It could be and should be done at all the levels. People should remember that if you think the federal taxes aren't fair, when you move to state and local, it's even grosser because the ability to pay criterion has virtually disappeared. So the opening gun of what I would say is a much more like the 50s and 60s level of taxes. And then beyond that, wealth taxes, which should have been part of the American scene, haven't been and are different from income taxes. And therein lies a whole nother dimension we ought to explore.